And it also means that Russia doesn't have to. I mean, it has no need to run budget deficits. And the same with China. China has been running a budget deficit recently in the wake of this COVID thing, but basically, it doesn't have the welfare commitments that we have. Our governments basically pay for everything when we go out of work or we get sick or whatever like that, at huge cost to a very, very inefficient state machine. This is not a problem in any of the BRICS members. So they actually can go on to gold standards, and they may well do this in order to protect themselves from our collapsing currencies, because the fiat era, which started in 1971, has basically come to an end.
Think. Act. And prosper. You are now tuned into the Money Level Show.
If you could give, the audience three things they could do to be preparing themselves for, I would say the inevitable. It's not going back the opposite direction. Government debt isn't being paid down. And so what would you suggest that people should be doing now, if you can give 2 to 3 things to prepare themselves?
Yeah. Well, looking at investments, that's the first thing, I think. I'm going to put gold and silver in a slightly different category, which I'll come to in a moment. But looking at investments, I think in the general sense, it's worth looking at the extractive industries, mining companies and so on and so forth. I mean, not just gold, but others. The reason I say that is that the sector, I think, has been very, very much overlooked. And it's worth noting that even though the US economy, our economy, the European economy, they're all in great difficulties, and these difficulties are just beginning to be obvious. I mean, the fact that you've invited me on this sort of tells me that you have worries about this situation, and your listeners and viewers have worries about the situation. So we're beginning to be aware that this situation is not really all that good. But amazingly, the majority of the world is not in this position. And I'm referring particularly to the Russian and Chinese axis and the way in which they plan to increase their investment throughout Asia, also throughout Africa, and throughout much of Latin America. Mm-hmm. Now, what this means is that demand for commodities is going to continue to hold up at a time when our currencies are coming into difficulties, running into difficulties, and so on and so forth. So particularly if you look at sort of, precious metals mining, they are, I think, very, very cheap on any basis. They are neglected. They do not normally form part of the ordinary portfolio now. It's the ordinary portfolio that is the problem. So what I would see is at least some portfolio money switching into mining stocks as the situation unravels. And the thing that's important about mining stocks is not only is what they extract from the earth, tangible, real stuff compared with the fiat currencies, and therefore they will rise in fiat currency terms. But we can see that there is a huge demand for these, minerals and metals and so on and so forth, as a consequence of what China and Russia are doing with Asia. With BRICS, which has got a meeting coming up in August in Johannesburg, they are 64% of the world's population, looking at the list of attendees. On top of that, they represent over 60% of the world's GDP on a purchasing power parity basis. So, there is a big story there, but it's not with us, it's elsewhere. And it's the way to play it, I think, is with the extractive industries.
Mhm.
The other thing I would do is, I mean, what we're really talking about when we say that we're in a debt trap and, the banks are risky, the central banks, most of them are now in the West anyway, are in negative equity. I mean, look at the Japanese, the Bank of Japan's balance sheet, and you think, oh my God, that's so deeply in negative equity, is just incredible. And also the Eurozone. The Eurozone is virtually all the national central banks have got this problem. And that is going to be a very difficult system to recapitalize because of the various parties involved and the political permissions that are going to be, the legislation that's going to be required to do it across multiple jurisdictions. That I think actually could lead to complete collapse of the euro system. But anyway, I'm going off topic talking about that. So there's a lot of risk in our Western fiat currency credit system, and it goes right from the top central banks the whole way through the banking system. I would suggest that what people should consider is hedging themselves out of that currency, out of that credit crisis, potential credit crisis. And the way you do that is you buy real money with no counterparty risk, which is gold, which is silver to a lesser extent. Silver, I think, is more, it's an industrial metal, really, and I don't actually see it ever coming back as gold, but as central bank money. But having said that, it does tend to move twice as fast as gold. So if gold rises 1%, silver rises nearly 2%, on average.
Really quick, Alasdair. So with silver, like my kind of take on it, if gold gets, say like the price of gold, goes really high, it seems like silver would be like the most affordable option for like the moms and pops, right? Because the price of gold went, really high, and it may be hard to afford that. What's your take on that? Hello, everyone. Sorry for the break in action, but please click the link in the description below. This is to the New Orleans Investment Conference. They are going to have some amazing speakers there, such as Jim Rickards, Peter Schiff, George Gammon, Rick Rule, and Danielle DiMartino Booth. This investment conference is put on every year by Brian Lundeen and his team, and they're going to have so many speakers there that can speak to what is happening in the macro environment, what is happening with precious metals, what is happening with natural resources, and many other things so that we can position ourselves to prosper. So thank you all for tuning in to this message. Now enjoy the interview.
I don't agree with that, actually, Daryl, because the problem with the moms and pops is that if you look at silver, it's very, very volatile. And I think risk appetite, amongst the elderly and those who are desperately trying to keep whatever they've got in terms of wealth together, I think it's risk. Risk is something that you really want to avoid. You can buy, the fact that gold is trading at, say, 1930 or whatever it is today, is not that material, because you don't have to buy one single ounce. I mean, you can buy smaller amounts. There are smaller coins, and through Shift Gold, somewhere like that, you can buy small coins, small bars, and just tuck them away and pray you don't have to use them. Because the idea is not to buy them as an investment to sell at a profit later on. The idea basically is that you've got it there when everything else goes under. You've at least got something you can buy the things you need with. That is the whole point about it. So those are my two suggestions, if you like. The one is look at extractive industries. I mean, I'm not just talking about precious metals, but I'm trying to look at the big geopolitical picture, and how that's going to benefit demand for the commodities, everything from base metals, precious metals, even agri-food, things like that. That's going to increase over time. Of that, I'm absolutely certain, because of the Chinese thing. And the second recommendation is hedge out of risky credit by actually having just a little bit of real money. And you can either have it in your hands, which, I mean, there are all sorts of dealers around the nation you can go to. Just find a reputable one is all I would say. Or you can, if you've got, sort of more money to protect, more currency to protect, you could look at having it stored in somewhere like gold money, which offers storage facilities around the world in fully insured vaults. So, that's the other option. So that between those two, I think we could probably cover most people.
Mm-hmm. What would you say about personal consumer debt? Obviously, I mean, getting out of debt is like a given, just being, financially wise. Do you feel like that should be something that people focus on as well?
Yeah, well, obviously, it's going to be very much at the top of everybody's minds, I think. And I think really that it boils down to a debt management situation. The worst thing you can do, I can only comment about this country, and I think what I say about this country hopefully is applicable to some degree in America. But the worst thing you can do, if you owe money to, say, a bank, or if you've got a mortgage which you can't pay, the worst thing you can do is not talk to the bank. If you take the initiative and say, look, I've got a problem, I can't meet these payments. What I'm going to do is I'm prepared to pay something every month, which I can afford. But what I want you to do is to suspend the interest payments while I try and sort this out. You will find that in most cases that banks and other financial companies will actually try and help you manage the situation. And so I would strongly recommend that that's the sort of approach you follow, rather than just bury your head in the sand and hope the problem will go away, because it won't go away. I'm afraid.
Yeah, agreed. Yeah. Agreed.
So I think that's just as a matter of principle, I think that's the sort of approach people should take. Because remember, nobody wants to foreclose on you. They really don't. I mean, unless you really upset them. If you're very rude to someone who you owe money to, they're going to come for you.
They want the money. They want the money. That's what they in it for, right?
Yeah, but exactly. But they know they're not going to get the money if they foreclose on you, or the chances of it, they would at least give you a chance. That is just human nature from the other side of the problem, and I think that's what you've really got to consider.
Mm-hmm. Yeah, thanks for that. So just as we wrap up, there's been a lot of talk about the BRICS meeting coming up, and potential announcing of a gold-linked or backed currency. And I know that I'm sure that you've been keeping your finger on the pulse of that. What's kind of your perspective on what may happen in that meeting?
Yeah, well, you're right. I have been following this story for some considerable time, and it really started in earnest when the West introduced sanctions against Russia. Because just after that, President Putin appointed a guy called Sergei Glaziev to look at, and this I would think we should regard as a pilot project, incidentally, to look at providing a new currency, settlement currency, for settling cross-border trade. This is, whether it's goods, services, whether it's, commodities bought in one state, by another state, and all the rest of it. And this was initially designed for what's called the Eurasian Economic Union, which basically is Russia, China, and the ex-Soviet states to the south of Russia, but to the north of China. So there are about, I think there's something like 5 or 6 of these states. And initially, and it was quite a political thing, in the sense that Glaziev had to effectively sell the concept to these nations. And it's interesting to watch how his thinking progressed and the way in which he progressed it, because what he said was, this was way back in April last year. He said that, he's looking to design this new trade settlement currency, which would be based on a mixture of the existing national currencies and commodities. And it was sort of very vague and airy-fairy. Now, you can understand that as a starting point from the point of view of the politics of the situation. What has happened is that it has evolved from that into, quite simply, a new trade settlement currency in addition to the national currencies, but based solely on gold. Now, this is very, very important. And I think that this pilot project, if you like, for the Eurasian Economic Union is what actually is going to be presented to the BRICS membership in August, later on this month, on August the 22nd to the 24th in Johannesburg. The attendees are said to be up to 41 nations now. Now, this is interesting because obviously what they want, when they're exporters, they want to have a currency which is valuable to them. This idea of doing away with the dollar and instead accepting, say, Indian rupees or something like that, you can't do anything with them, really. And particularly, Russia has the problem that it's sold oil to India and it's been paid in rupees, but it can't do anything with them because of the way the foreign exchange markets work, because what you have to do is you have to sell your rupees to buy dollars and then sell your dollars to buy rubles, but the dollar is banned as far as Russia is concerned. So you can see that, a sound currency for this purpose, for this supranational purpose, actually does make an awful lot of sense. Now, there's been quite a lot of comment about this, really from the establishment, if you like. For example, the head of the Bank of Russia says, it's going to take a long time to plan this. Also, the Indians, there's a sort of relatively minor Indian, foreign minister said, we're not going to go along with this. And various other sort of indications like that. Also, the head of the New Development Bank, which is like the equivalent of the IMF for the BRICS countries, based in Shanghai, has equally said, it's not really going to happen, or it's going to take time, sort of thing. Now, these people are not in the loop because the statement about this was made by RT, which is a Russian government news agency. They would not have made that statement without agreement from the top. And the other thing you've got to bear in mind is that we're looking at Russia, Iran, and also Saudi Arabia, major energy exporters. They want to get paid in gold or in something that is valued in gold, which is credit valued in gold. They are driving this, not the Indian foreign minister, who is a Keynesian. We''t inflicted Keynesian economics on the poor Indian subcontinent. I know it's all our fault. The Bank of England has been responsible for appointing the senior executives in the Bank of India. We are complicit in this, I can assure you, which is not good news. But anyway, you can see that it's going to be driven, I think, by the demands of these big energy boys. I'm sure that they would turn around to India and say, look, if you're prepared to pay in this new currency, then we'll give you a decent discount. But, they cannot continue to accept rupees, kwacha, all these sort of currencies, which buy absolutely nothing. And, or Turkish lira, which go down, there's a one-way trip on that one, just down, 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 down. The Argentine, down, 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 down goes the peso. So you can see where this is going. And I think that there is a general understanding that it is important to have a sound currency for the inter-country trade, leaving the domestic central banks with the responsibility and the power over their own domestic currencies. But I think this is stage one because I've been looking, and I'll be releasing an article tomorrow on this. I've been looking at the situation. If Russia wanted to go on to a gold standard for its ruble, and China go on to a gold standard for its renminbi. And on the figures that I have got, Russia could do it very, very easily. the amount of gold that she has got in terms of declared reserves and also in 2 other state funds indicates to me that her M0, which is the most liquid form of credit issued by the central bank, mainly banknotes, a little bit of sort of institutional stuff in the background. But that M0 is covered over 4 times by Russia's gold. Because I think that Russia has got in excess of 10,000 tons when you take into account those state funds. China, I think, is covered about 1.45 times, which is adequate cover. I mean, it's plenty of cover. Both nations have, they're the 2 largest gold miners in the world. So you've got gold coming into the state's coffers all the time. So, this is a sustainable situation. And look at the benefits to Russia. At the moment, you've got the ruble is sliding. It sort of steadied around about 65 to 70 to the dollar in the aftermath of the sanctions debacle. It is now over 90. So it is losing purchasing power. You look at the interest rates, the Bank of Russia's interest rate is something like 8.5%. The yield on the 10-year Russian government bond is 11.5%. These are crazy rates. Now, if you could stabilize the currency and contain the M0 element of it, then under those circumstances, what you would get is you would get an economy that would tick along very, very happily with long-term interest rates running at less than 5%. And so you can see that sound money just makes so much sense for the Russian economy. The Russian economy, incidentally, is very well set up. I mean, they've got the tax rate is 13%. That's personal taxes. Wouldn't we like that? The corporation tax is around about 20%. I mean, there are obviously other taxes and so on. But the point is that the tax system allows businesses to actually prosper. And I'm talking about the businesses you don't really see, the small and medium-sized businesses that actually make up 80% of any economy. They can prosper under this tax regime. And it also means that Russia doesn't have to. I mean, it has no need to run budget deficits. And the same with China. China has been running a budget deficit recently in the wake of this COVID thing, but basically, it doesn't have the welfare commitments that we have. Our governments basically pay for everything when we go out of work or we get sick or whatever like that, at huge, huge cost to a very, very inefficient state machine. This is not a problem in any of the BRICS members. So they actually can go on to gold standards, and they may well do this in order to protect themselves from our collapsing currencies, because the fiat era, which started in 1971, has basically come to an end.
Mm-hmm. Yeah, and it seems like I was kind of wondering, like when you were talking, like how are we, our nations responding or combating or whatnot, and I've seen that there has been, I think Britain, they allow licenses for I guess oil companies or something. So are we going to have to really start producing our own energy? Are we going to have to, transition to gold? I imagine the Western nations aren't just going to not respond in any type of way or try to fix something,
Yeah, I very much hope, and I'm sure most of your viewers hope, that the extremists in this anti-oil fossil fuel movement, it's reached sort of peak stupidity, and hopefully some sense will come back into it. I mean, the reason that Saudi Arabia and the Gulf Cooperation Council have aligned themselves with China and Russia is because we've told them we don't want their stuff. So are we surprised? Yes, this is so I think we're seeing a little bit of common sense maybe coming back into it. In our case, in this country, you're really talking about North Sea oil licenses. We have got a general election coming up next year. you've got a presidential election coming up as well, I think.
Mhm.
So the politicians are getting a bit more savvy about what the majority of people actually think, rather than responding to the lunatic fringe. So I think that's probably what that's really more about, if you like, than anything else. But let's hope it gets a little bit of momentum, and we don't sort of cut ourselves off completely from fuel. I mean, it's going to be similar in America, but in Europe, something like 98% of logistics is driven by diesel. Where's the electricity capacity going to come from to replace that? It's not going to happen. We're just trying to, our dear politicians are sort of hell bent on destroying our economies completely, which is another aspect. But anyway, we won't bring that into the currency story. I think there's bad enough news as it is.
Definitely. Well, Alasdair, thank you for coming on. Appreciate you spending your time with us today, and blessing us with your time and knowledge. So where can people find more about Gold Money and Shift Gold?
If you go, Shift Gold has got a website. I think we're combining the two actually in time. But I write principally for Gold Money. It appears on their site. It will be on the combined site eventually. And I do an article either on, geopolitics, economics, precious metals, and so on, which is published on Thursday, and then I do a market report on the Friday, and they come out sort of midday-ish EST. So where you are, I think it's probably earlier in the morning.
Mm-hmm. Okay. All right. Well, I'll be sure to link the websites in the description below, and thank you for your time.
Daryl, thank you very much for having me.